G'day folks, Jim here from FX Charts, Friday the 7th of March. It's been a pretty big day for the euro. It's taken the other risk-related currencies along with it after Mario Draghi's slightly more upbeat outlook on inflation and on economic growth in Europe. So the euro is pretty much sharply higher, and this all comes ahead of today's non-farm payrolls, which will be the next big driver. So we're going to have a look at the chart straight away, and as we can see here, we've taken out this long-term resistance here, which is at 138.30, and this is a 4-hour chart. We're headed up here. I think to 138.90 is going to be strong. We haven't been above that since December, and it looks as though we've got a very good chance of getting back there. The 4-hour charts are pointing higher, so I think the momentum for the time being remains higher. As far as the dailies are concerned, they look to be building up some momentum. Now, it all does depend on the non-farm payrolls. An expectation of 150,000 is the general view there, and unemployment staying steady at around 6.6%. Now, if we come out below that, then the dollar is going to remain under severe pressure, and it will be headed higher. A good number, of course, will head in the other direction, and we'll see the US dollar regain some strength, and the euro could come under pressure then. And of course, we've also got the Ukraine situation to throw in the mix, and I don't think over the weekend the market might be a little bit wary of buying the euro up too high in case there's a major deterioration there, which would see a sharp opening gap lower on Monday morning. But in the meantime, as I say, 138.90. Beyond there, we have to go out to the weeklies, really. Let me blow that up a little bit. We've got above 138.90. We actually need to go to the Ichimoku chart. Here we are. 139.50 is the top of the cloud here. 139.60, somewhere around there. So that's going to provide the immediate resistance if we do break above 139. And then going back here, there's not really a lot beyond there. There's not really a lot, as you can see, ahead of 142.5. Now 140 is obviously going to be fairly psychological, wrapped down around here, but there's not an awful lot ahead of this 142.5 level, which is the 76.4% resistance. Now I'll break back down to the downside. Well, 138.30 will be the first level. Below 138, we head back towards sort of this 137, well, 137.70 has been a bit of a pivot, but 137.30.40 will hold it. And then below there, we've got we've got the 137, the figure, rising trend support. If we were to break that, if the non-farm payrolls came out very good number, then the last week's low at 136.43 will provide a strong base, but I don't think we're going that low. So all up today, I think looking to buy dips, but really dependent on the outcome of the data later on from the States. Dollar yen, that's also breaking some trend resistance. It's coming up against some a good level here at 103.15. If we do break above that, then we could be headed up to sort of this 103.60 area. Once again, it depends on the non-farm payrolls. A good number would see the dollar climb higher. A poor number would see a reversal in the dollar's fortunes. And also, once again, the yen is a safe haven from the goings on in Russia and the Crimea. So I'm not sure that the dollar is going to react too greatly today. If it is a good number, the dollar will want to go higher, but the market will be wary of any events over the weekend. But having said that, the 4-hour charts are looking positive. The dailies also look to be winding up to head higher. So ultimately, I think we are going to head a little bit higher, but it's going to be choppy. And I'd be quite surprised today to see it much above this 103.60 level. While on the downside, the immediate support comes in down. We've got this rising trend support down here. The previous high at 102.80 will be the first support, and then we had that sort of 102.50-60 area should hold it on the day. The hourly charts are a little bit overbought, but they're not showing any sign of really turning around at this stage. Sterling, well, the Bank of England left rates unchanged. as they did with the asset purchase program today. Sterling, it was a bit choppy. It got down to 166.85 after the. And it was pretty choppy after the release of the data, but the 1 and 200 hour moving average held it. Got up to a high of 167.80, 167.76 actually. Sorry, dragged up by the euro, but it's since come back and it's trading at 167.40. Now, really, this sideways trading could well continue. The 1 hour momentum is not really suggestive of anything particular. 4 hours maybe pushing a little bit higher, and the dailies that's fairly inconclusive as well. So my own view is that we probably it depends on the data obviously, but this the 168.21 resistance that we got, that's the high of the year so far. So I don't think we're probably going above there today. But equally, a dip down to 166.85, the session low, should hold it. There's FIBO support down there as well. A break to the downside would take us back towards the 166.05, but which is where this FIBO support is. I don't think we're going down there, and 168.20, as I say, I think should cap it on the top side. If we do head above that, then what is a level up here, 168.75, which goes back or quite some way to, where is it? So 2009. So that's going to be strong resistance, and I don't think we're going to take that out in the coming session. Dollar Swiss, well, that's headed lower immediately after the ECB announcement, but we're still holding above last week's lows at 87.77. Now, if that gets taken out, then I think we're probably in for quite a swing lower. We've got this level down here. This is about 86.45, which is the long-term channel. I can show you that better on the daily charts, really. 86.45. That's a long way off, so it would need a pretty poor result from the non-farm payrolls to head down there. But it's looking that way. The indicators are the short-term. That's the daily indicators. Sorry, the short-term indicators are still quite bearish. Dailies are not quite, don't look quite so sure, but they're certainly not turning higher. So we could end up heading back towards the downside here for a look at the channel base. If we headed higher, the immediate support, immediate resistance is around 88.5, which has been the pivot around here, and above there we'd head back to 88.95, and then possibly on towards 89.20. But I don't think we're going to see that today. The Aussie, well, that's building good positive momentum. It's since the release of the retail sales and trade data yesterday, it's only headed in one direction. And on the daily charts, it looks as though we've got this sort of shoulder head shoulder base here, which we're breaking the neckline at the moment. Now it's a little bit, there's a lot of information on this chart here, but the blue line here is the 100-day moving average. That's 90.75. That should provide the first support. It's also the neckline of this head and shoulder, so it's actually going to be quite important. And if we can continue to head higher, the 200-day moving average is at 91.60, and then we've got some the downtrend and some FIBO resistance here, just around 91.90. A break of 92, then that opens the way to some quite significantly higher levels. The target for the reverse head and shoulders, that's actually up here at about 94.90. So you know, there's plenty of potential, I think, on the top side. Good buys now at 90.50, where there's some Ichimoku support. I think it's the daily Tenkan that is down around there, and below there, there's going to be a good support down around here, this 90.05 level, which is the first FIBO support. So 90.75 and 90.50, and then 90.05 I think should hold it on the day. Below there we've got the 100 and 200 hour moving averages converging at about 89.75, but that looks well out of sight for the time being. The Kiwi, let's have a look at the Kiwi. Now that's also broken strong resistance, taken out this 84.30 high, taken out 84.60. It's headed up to a high of 85.03, and it looks as though the momentum is now building higher for a test here of the previous high. That was up around 85.43. Now if that gets taken out, then we're heading potentially quite significantly higher, up to this level here, which is around 86 3/4. We're too early for that yet, but certainly the momentum is building higher. The market's getting itself long for the RBNZ expected rate hike next week. Now, if they don't do anything, I think they probably will hike, but if they don't do anything, the market is going to be significantly disappointed, and we're going to see a nasty reversal to the downside. But that looks some way off at the moment. The weeklies are pretty flat, which is unsurprising given the long-term consolidation that we've had here. But the 4-hourlies, as I say, they've broken higher, and we could see a significant move later on. But the non-farm payrolls will decide it with the strength or otherwise of the US dollar, and the Kiwi will follow that. But right now, it does look as though, having broken the resistance, that we could potentially head on towards this sort of 85.40 level. The support now, 84.60, 84.50 will be the first support, and then back down here, 84.30 is this level here, which we had this double top that we've taken out, and then back below 84 cents. So that's about it for today. It's going to be a pretty busy session later on. We've also got Glenn Stevens from the Reserve Bank talking to the Australian House of Reps this morning. That takes place fairly shortly, actually, in the next hour and a half. So wait and see what he says. He won't be wanting to talk the Aussie up, but the data does look to be improving slightly. Later on, we've got the German industrial production output, and we've also got the UK inflation outlook as well. So that could bounce sterling around a little bit. But realistically, it's also in Asia, we've also got the BOJ monthly economic outlook. But realistically, it's going to be the non-farm payrolls and the US jobs data that decides it. So until then, it could be a bit bouncy, but I don't think we're going to see anything too directional. So I'll wait for later in the evening Asian time for the real directional move. So that's about it for today. Have a very good one, and have a very good weekend, and we'll talk to you on Monday. Cheers.